Hello and welcome back to the Real Estate Unlimited podcast. My name's Sierra Steinmetz.
Brian Schuby.
Carrie Steele.
Bill Jones.
And we're the Jones home team.
And this is episode 55. We'll get right into it here. I'm kind of under the gun. I got to go get kids. So Carrie is talking inspections. Is it time to slash the price? I love that. My answer is probably going to be yes, right? Can we go right to that?
Are you selling or buying?
I don't know. Schuby, bridge loans. What are they and how do they work? Sierra's going to kick us off on appraisal gap. I woke up this morning warning about appraisal gap, so I'm glad that you were getting right into that. I've got a couple things so we have time. Big news, Compass is to acquire Anywhere, which if you're not familiar with who Anywhere is a real estate company that owns none other than Century 21, ERA, Better Homes and Gardens, Coldwell Banker, Sotheby's International kind of thing. So a lot going on there. Also wanted to get into some other stuff, but we'll see what we got then. Sierra, what do we got?
All right. So we're going to talk about appraisal gaps. I don't know if we've already talked about this or not. So if we have, I'm sorry, but we'll just do a refresher.
I feel like we touched it once upon a time. It's been forever ago. We're at episode 55.
I know. I feel like we talked about everything, but it's always a good topic to recover.
Mm-hmm. Yeah. So appraisal gaps are basically just the discrepancy in the contract purchase price of a home that's going to be purchased and then what the appraised value actually comes in at, which if you've ever had an appraisal gap issue, it's not exactly desirable.
I've had that. No, it is not desirable. It sucks.
That actually, I think my first one I ever had was my boyfriend's house. We had to encounter that.
Oh, that's right.
Yeah. Yes. And I was like, yeah, totally. This is totally fine. I'm like, Bill, what do we do now?
Right. That listing agent's terrible probably on that place. So
anyways, how does this happen? A big one is a hot market. People are going to be writing offers that are overpriced so that they can get into a house, especially if they've been searching for a really long time or if this house is perfect for them, but there's multiple offers and they've kind of got to adjust whatever that looks like for them to get the highest price, but highest price can be an issue if it comes down to the appraisal coming in low. I don't know that I've ever had that specific problem in
just
an appraisal
come in low.
Yeah. There's the only times I've had it, it's been just such a small margin that luckily we were able to figure it out. But I don't think I've ever had anyone go way over ask price and then it results in that.
Bill, you probably had some back in the 2000s.
Yeah, I mean honestly, that's more of a new. The appraisal gap thing wasn't. I don't remember if that was a thing back in the day. I don't remember that ever really coming up then. It usually just turned into like what you're talking about. If the appraisal came in low, how do you make up that difference? Mm-hmm. But nobody ever included that in their offers to to have an appraisal gap coverage.
Sure.
Then.
Right.
So
yes,
it was just how do we make it up? In general, it was the seller coming down in price.
Mm-hmm. Mm-hmm. Yeah. Either that or with unique properties too. The appraiser might see it one way compared to how the listing agent saw it when they set it up to be on the market. Mm-hmm. If it's got different features or it's just unique to the area, whatever, there's not a lot of comps available to justify it. That can definitely be an issue because at that point it kind of comes to your point of view and how you see it then compared to actually having hard data to look at with it. And then again, I guess another possibility would be a market that's moving quicker than maybe how that appraiser sees it at the time.
Like all appraisers when the market's actually moving. Because the appraisers always looking in the past. Yeah, they're looking in the past. And you got 6 people bidding on a property basically. And
yes, yeah. So, and especially if those comps are a few months close to a year old, that might not be relevant to what's happening right now, especially if it is a hot property. So that can become problematic. Why this matters, lenders are only going to finance the appraised value, not the contract value. They don't care what you came in at. If they think it's only worth this much, they're going off of that. So that becomes an issue because then it moves into the only options you have really are seller has to come down in price to meet that appraised value. Buyer has to essentially put more down, cover that cost up front out of pocket, which is not always realistic depending on their situation.
No, because they're usually already bringing a ton of money to closing, then have to make that up then.
Yes, and then having thousands of dollars that just have to be covered now. That's not necessarily
because in their mind too, well, now I'm overpaying for this house. The appraisal came in low, so that's kind of their mindset.
Yeah, or you can also split the difference, which I've had happen before too. Buyer brought a little bit more, seller came down a little bit. We met in the middle. And that was a very good resolution for that time specifically. I've had other times where the seller just came down and we were there, and it worked out that way. Or you can challenge the appraisal. I've never done this. I don't know.
Oh, I've tried. I'm 15 times probably. I don't think it's ever, maybe once or twice ever. It's probably been, no, I bet it's been 20, 30 times, and maybe once or twice ever has it been adjusted.
Yeah. I usually,
because that's basically you're telling the appraiser you don't know what you're doing.
Yes.
Let me do your job for you, and then having to just eat it.
So. But the hard part about that is, and this happened a couple of years ago, is something is worth what somebody's willing to pay, be it a used car,
100%.
a blouse, whatever. So if you're looking at a house and you've got 10 people putting in offers over ask price, like maybe it wasn't priced, maybe it was priced low to begin with, and don't just take everything into consideration. You've got 10 people jumping
and unfortunately that doesn't matter to them though.
I know, that's wild.
Things that haven't physically sold, even if the desire is there, that they can't use that as data in their appraisal report. And that
I was going to say, I've even had appraisers contact me before they submit the report and be like, hey, could you show us what comps you were kind of utilizing? And that kind of helps maybe avoid some of that trying to argue with them at the end, rather, hey, what comps did you use? And that way, when they're like, hey, I'm coming up a little bit short, even using your comps, that maybe alleviates you guys, us from having to say, hey, look, you're using the wrong comps and trying to tell them that they're wrong.
Or after closing, calling you 3 weeks or a month and a half after closing, being like, hey, what concessions did you have on that place?
I love how your opinion doesn't matter up front, but then after the fact, they want to know all kind of stuff too.
Of course. That's awesome. And then I guess the final resolution would be to just walk away if you're able to at that point, depending on the contingencies, I guess.
Which pretty much every contract has a financing and appraisal contingency pretty much in there.
Yeah, which I luckily have never had that happen where the whole thing falls apart because of the appraisal gap. So have you?
I mean, I feel like I've had one where, they just couldn't get there number-wise.
Yeah, which is really unfortunate because that is, in my opinion, pretty far along in the process. Like whether you had inspections or not, especially if you did have inspections, you've already paid for an inspection, your buyers have paid for an inspection, they've paid for an appraisal. And now we're through this point where after this appraisal comes back, if it came back well, then you're just through final underwriting and all that.
Was it that upper house that I had with the animal carcasses in the yard?
Oh, yeah. Yes, yeah.
Because I feel like we started, it was a cash buyer. I don't know. It could be wrong because cash buyer wouldn't, that ended up buying it. But I feel like the person that wanted to buy it prior to that, I could be wrong. I could be making it up.
Yeah, well, that's where I guess I take exception with that is a lot of times if you have a deal that does fall apart, appraisal comes in low, you challenge it, you don't get anywhere.
Yeah.
And then new buyer comes along, new appraiser, then magically the number comes in.
It comes out, or it's better.
It's way over then. Yeah. So there's no exact science to it. The appraisers don't have a crystal ball.
It's so frustrating though.
Yeah, that's my frustration
as an agent,
for sure. Yeah.
And not just with that, but just the appraisal in general, whether it's high or low. It's just like on eggshells. Like, are they going to call anything out that? And it just depends on the appraiser.
It really does.
And like, how do you tell your people like? There is no cookie cutter. There is no check. Like there's a checklist, yes, but it's a great checklist.
Yes, and some are a lot more strict than others, and the others are a lot more lenient. And you'll have something go through that you're like, oh wow, I thought I was gonna have a lot of problems with this one, and I didn't, or whatever. You look at the price and you're like, I don't know, and then it's fine, you know. So, and that it's hard to come to your buyers and say, I mean, they'll for sure mark this, but maybe this, I don't know.
But man, I just had one that was FHA that I could have swore I went in there. I was like, there's no way this is going to pass. There's this and this and this and this. And they're like, oh, you need something on the hot water heater for the hot water. I'm like, what? Of all the things, I literally, I'm not an inspector and I'm not an appraiser, but I've been doing this long enough that I could write a checklist of the things that are wrong with this house for FHA, and you just... So, okay, it's good.
Yeah, it's good. It's fine.
I'm not mad about it. We closed.
Appraised value, Google, professional estimated market worth of a property determined by a licensed appraiser at a specific point in time. So yeah, that's like going back to
estimate. Yeah,
auctioneering school. It's a opinion of value on a given day. That's all it is. So, but then the banks just take that to heart, or the ones where the appraisal sticks with the property, like an FHA deal or something. And yeah, that's tough.
Yeah, and like emphasis on specific point in time or given day or whatever, because like we just said, you'll have another appraiser come through and they're like, oh my gosh, this is great. Like this is yeah, no problem. And after you already had a nightmare with it. So,
the old deal fall apart
yeah,
then. So
it's very situational. And then, so just some strategies to prevent or prepare for this issue. There is an appraisal gap clause that you can put into a contract that can kind of lay out how much a buyer is willing to cover if it came to that point. I've never personally put one like that into a contract. I just have never been in the scenario where I thought it would be necessary.
I've only used it a handful of times, and you do just want to make sure that you put a limit on that then too, because what if it's, you're willing to do $10,000 and it comes in $100,000 difference or something.
Right.
Did you have one at the park that was like that over by Hedges?
I don't know if I've ever actually written.
I'm almost positive I've worked on one with one of you guys.
I'm thinking of an escalation clause. I'm thinking of an escalation clause, not the appraisal clause, not that.
Yeah.
Appraisal gap.
So yeah, and then like pre-listing wise, if you have a good agent, they should be able to get you pretty darn close to where it should be. Market value, that should come close to where an appraiser would have their professional opinion be at. And again, sometimes it's a little off, and it sucks when it's those ones that are just $5,000 or less, and it's like, you gotta be kidding
or
me,
even less.
Like
I've had some like
$1,100.
$1,200. I'm like, really? It's a $200,000 house, and you can't find $1,200.
Exactly. Yeah.
Especially they're leaving the curtains.
Yeah.
Yeah, what else do you need?
Especially in such a dynamic market too. Like I feel like there is some give, especially when you're that close. But I'm not an appraiser.
Does it make you guys wonder though if the appraiser doesn't think that maybe the buyer's not a strong enough candidate, and so they're going to skew the numbers in favor of,
I don't think they usually know who it is.
Yeah, I don't think that's the case. But I often wonder that. Like,
yeah. I go to what you're saying though too, because we have auctions in too, or you have like 5 or 6 people willing to pay that amount, and the appraisal comes in low. It's like you can't tell that is the market value.
Exactly.
6 people or 6 qualified buyers or whatever are willing to pay X amount of dollars for this property. You cannot say the appraisal's coming in low.
Right.
I know that's not what they go by, but
it sucks when that's the data that you have in your head.
Yeah.
And you can show them here. I printed it off. I got I got your comps. I got 6 other offers here. They're all right there. Yeah, it comes in low.
Like Homer Simpson.
And it's just crazy because that one offer may not work, but the next
one of the other ones would have.
Different
appraisal,
work,
different bank,
with a different appraisal and a different bank. So
that like makes my blood boil a little bit. Like it's just so frustrating. Such a weird caveat.
Be careful. It'll end up being the next lawsuit.
Oh yeah, that'll be the next one.
But yeah, and then just keeping everyone educated, keep it close to where you think market value is. If your buyer's like, we want this house, we need this house, and they're financing and they've got the funds to go $50,000 over asking, maybe look a little deeper into it before doing that, so that there's not a huge issue when it comes to the appraisal and whatnot. Because I'm sure any seller is going to want to take an offer that's $50,000 over asking.
They want the money, right? Yeah.
It doesn't always.
I hope that makes the bank feel dumb when they're like, no, it appraised at this, and then the buyer comes up with the cash. Like they're willing to pay it, and the next guy was too. Yeah.
Yeah, for sure.
All right, cool. Who's up next here?
Yeah, I'll go.
What you got? Carrier inspections.
Time to slash the price? ? So I've heard here in the last couple of houses that I've shown, and this isn't me offering this information. This is just the buyer's dad or whoever just kind of, you get the inspection. You can just, you can renegotiate.
Good opportunity to renegotiate.
But you're walking through and you're pointing out the things that you're going to negotiate the price in. You haven't even wrote the offer yet. It's like, wait a minute. If you can see, and when I priced it, I could see, or you could see, you priced it with those necessary repairs in mind.
Yeah, that wasn't a hidden thing.
To come in and say, okay, the door's off its hinges, the water pressure's not amazing, there's not a lot of natural light, whatever, I'm just making stuff up. And then say, well, you know what, I'm going to go ahead and just come in $25,000 lower after I get that inspection because there's a 15 pages worth of stuff. 15 pages, that's nothing on an inspection.
Yeah. And when half an inspection is like maintenance items that they're like making you aware of to keep up with. It
needs maintenance. It needs, the windows need caulked. The seals need replaced. Maybe the latches are due. Does that mean that you're going to comp out an entire new window when they were just put in, 10 years ago? That's up to you.
Dirty furnace filter, that's $5,000 right there.
Dirty,
right.
Well, it depends how long it's been in there gumming up the works. But so the purpose of an inspection in an inspection period is to give time to process the information that the inspector has given back, on the house. And we talked about this before in past podcasts, that it's very common to have, 50, 100, 150, depending upon pages on how many square footage or how many units are there, how much the inspector looks at, from electrical to plumbing to foundation to the roof. And what are those major repairs? So if you walk up to the property and all of a sudden you see that the roof is at the last, 2 years of its life, just, you can see the shingles are blown off.
Right.
It's discolored. It's, it's aged. You can't automatically walk in and say, we're dropping the price $20,000 because it needs a new roof. Because the chances are, when the agent went there, when they did their walkthrough, when they spent time on the comps, they took that in consideration. Mm-hmm. Majority of the time, if you get an educated,
account for that on your offer.
If you've got an educated agent, be it the buy side or the sell side, the seller's not going to walk up unless the seller's agent's being pushed by the seller, because there is that sometimes where they know that it should have been listed for less, but based on the roof, okay, we know it needs a new roof, we know it needs a new window or a new septic or whatever. The price reflects that, because it's stuff that and you can see or have been told,
right?
In the residential property disclosure and so on. So to come in and say right off the bat, these things that we see, we're going to renegotiate. Well, that's not necessarily how it is. Once you put
I can sure try.
Well, 100%. Yeah. So
might not get you anywhere. Yeah.
Offering less during the inspection. So typically renegotiating the price after an inspection, it's more so for significant issues that you can't see to the eye. So I walk up to a house, it's a $200,000 house. I walk through, I see the roof needs replaced. I see the doors off its hinges. I see all the windows need sealed. Okay, I'm coming up with a number in my mind. Okay, I'm at 184. I'm just going to make up a number. I'm at 184. It's a low offer on a $200,000 house, but I'm the buyer. I think that's what it's worth. Okay, we go through this huge inspection period, all right, or inspection process, and I get $150 or 150 pages back of stuff, and they're like, the wiring shot, the roof is shot, the foundation has a significant crack in it that's going to require, backfill of stone. And we're talking $20,000, $30,000, $40,000 in foundation work and electrical work. And the siding is ripped off. And there's all these things that you didn't know.
Yeah,
the attic, maybe the attic wasn't vented and now it's full of mold, etc. That's why you do a property inspection, not to go back to the negotiation table and say, oh, it's time to knock $40,000 off of this purchase price.
Sure.
Mm-hmm. I was at 180, whatever. Now, you know what? 150. That's the best I can do. It's like, if you see those significant things when you walk through, then write your offer based on that.
Yeah, save everyone time.
Don't wait until you get the inspection report back and they're like, oh, the light switch plates need to be covered. They're $1 or they're $2.
Right.
Like, that's not the light fixtures hanging. You could see it hanging when you walked in there.
Yeah,
the
you're off with that, being able to see that.
The ceiling fan's from 1993. Of course you knew the ceiling fan was from 1993, and it's wobbling. That's not why you're offering less. If you still want the house, given that there are no significant issues, the roof damage, foundation cracks, outdated plumbing, electrical issues. I mean, if you've got safety issues, fire hazard, that's when it's time to say, okay, you've got some options here. If you're the buyer and you've already put the offer in on the house of 180, whatever, on this $200,000 house, you can say, you know what? Based on all of those things, I do know a guy that can fix all these things, but we're going to have to come down in price because I don't see the value that I did before.
Right.
Okay. You can present that to the seller. The seller could come back and say, you know what? I'm willing to drop the price $20,000 because even I didn't know those things exist. So I'm willing to go down $20,000.
Sure. You
could meet in the middle. You could do 10 and 10. I'll come up 10 or I'll come down 10. You come down 10, whatever, we'll meet in the middle. Or if you can't be on the same page, you can simply walk away. If you feel like you're going to have to go 150 on a $200,000 price and the sellers aren't willing or not able to come down to that price point, at that point, you've got enough information in your hands that says, I'm not getting into a money pit. I don't want these issues. Null and void the contract. I'm done. And that's your inspection clause. Is if there's something significant in there that you didn't see before, didn't know before, and you can't come to terms and can't negotiate, then you can walk away.
Right.
Yeah.
I've had that happen over small stuff too, not just major items. And we're dealing with one right now, a Rheon system.
I feel like some of that stuff is like buyers get wet or get
cold feet.
Cold feet.
They're probably cold wet feet.
Cold wet feet. because they are just, God, I already wasn't sure about buying a house, and this just solidified it that I just don't want to get into all of the problems.
I'm out.
Yeah. Or like buyer's dad that is not, he's not construction savvy.
Yeah.
And he sees things like light switch covers or ceiling fans, and he's like, oh, you don't want to get into that. It's like, I could do that, Sierra could do that.
Right.
I know what you're going to say probably about inspection, what people do with price.
Yep, that's what I was actually getting ready to talk about. I think we've talked about this before, but it's just funny how a buyer comes up with a price, they do their and they agree to a higher price, and then all of a sudden at the last second, once they get the inspection report back, we're right back to the price that they originally offered, and it's just like, okay, everybody knows what you're doing, but
yeah,
I originally offered 175, we agreed to 200.
Yeah.
Oh, the refrigerator doesn't work. 1175. I'm back at 175. I'm like, what? How's that?
That's common
all the
that's
time. Yeah, like I'm going to use this to get right where I was.
Yeah.
So that happens a lot. Yeah, that's the furnace filter that's worth $20,000 or whatever. Then so.
Always.
And it's also funny that the appliances that I know that we've talked about this too. Furnace, hot water heater. Those items that are old but they're still working. How many times people go back and say, "Hey, we need this furnace replaced because it's old or it's past its life." Okay, I understand that it's old, but it's still working.
Meanwhile,
how do you ask somebody to replace something that's still actively working?
But meanwhile, it's a 1987. It's more efficient than any furnace on the market.
Yeah. Or it'll outlast everybody at that point.
It's from 75.
And it's still going.
It's great.
You better knock on wood.
Right. All right. Chew, bridge loans. What do we do on the bridge loans?
Yeah, so been in a lot more situations here lately, I would say myself, and I don't know about you guys, where people have to sell their home in order to buy their current home. I know Sierra and I currently have one. So one of the options that a potential buyer could have, and that I would suggest talking to your lender about, would be a bridge loan. A bridge loan is a short-term loan that helps bridge the gap between two financial obligations, most commonly in real estate when you're buying a new home before selling your current home. Some typical key features: it provides temporary funds so you can purchase your new property while waiting for your existing property to then sell. Term length, usually these are within 6 to 12 months. So it's one of those where, a lot of times where people run into problems is if, they put their house on the market and then they do the bridge loan and it takes a little bit longer to sell their home than what they initially expected. Collateral, typically the bridge loan is secured by your current home. And then also it does have typically a higher mortgage or interest rate than your standard 30-year loan or something like that. Pros: it lets you buy your new home without waiting to sell your current one. Provides flexibility in a competitive housing market, and it can also prevent you from needing temporary housing or staying in a hotel or getting a storage unit for your items or things like that. Cons, like we talked about: higher interest rates typically compared to your traditional loans. The one downside is you are carrying two mortgages. Usually, I think with the bridge loans, it's like interest only or something like that.
Generally, yeah.
So you still currently have your full mortgage payment on your current home. However, you may be just interest only on your bridge loan until you can close on your current home then. So just being aware that you may have two mortgages, or at least mortgage plus an interest only payment for a short period of time, or until your current home sells. And then, like I talked about, it can be risky if your current home takes longer to sell than you originally expected to. Mm-hmm. So just another option that I wanted to throw out there to buyers, as I am seeing a lot more home sale contingencies when purchasing your new home. So just something to if a potential buyer is interested and doesn't want to hold up the deal, because again, that can be a deal breaker in some instances where if you have multiple offers or something like that.
So that it's a higher interest rate. So what do they do? Refi? So it's the bridge loan's a temporary loan that just gets you from point A to point B. And then once you sell that one and secure this one, that is kind of like a refinance.
Yeah, I think they would use the loan or the proceeds from your home sale to pay off the bridge loan then.
Gotcha.
You guys should just paying everything off then. With
your home proceeds.
But the only real risk, like you said, is just you end up with two mortgages. Then at that point, even if one is just interest only, you're still paying interest.
So if you're buying a $400,000 house and the house you had to sell was $200,000, and you don't have the additional proceeds, does that just work into that bridge loan just stays the same, or is it a whole new loan? I guess that was my question.
It's just whatever the number needs to work, for the most part. If they're, if they need a $50,000 or $200,000 difference, and they would make, the loan would be according to that, because sometimes as people moving down too, they have a $400,000 house, but they haven't gotten sold yet, and they're buying a $200,000 condo.
Yeah.
They just don't have $200,000. They're almost just, if they can't qualify for a loan, they could do that, a bridge in the other way.
Yeah. And I think just from, doing some homework and stuff, I think they can do it. If you just need a certain amount of money for your down payment to get you into the next place.
It says that
doesn't,
right there.
Yeah. It doesn't have to be the full amount of a new house. It could just be potentially, a portion of that money that you need.
Yeah.
But still, you're borrowing somebody's money. Yeah, for sure.
And for a long time,
you couldn't do a bridge loan. Nobody was doing bridge loans for the longest time. Now that they're finally, some of them are doing it. I think COVID, everything just went away for a couple of years, it felt like, but now they're finally an option. I just still like the idea, if you can do it, seller gets her home on the market, gets it under contract, and then writes an offer contingent upon them selling their home.
Timing is so important.
But then the timing, like Carrie, you and I have had several of them where it's like you're lining up 4 or 5 deals sometimes.
Because then their buyer of their house is contingent upon the sale of theirs, and that person who's buying is contingent upon the sale of theirs, and then you've got a new first-time home buyer. Like, it all has to be...
Take a breath.
That really happened.
It
is.
It literally happens.
What do we have? Like 4, 6? I don't know. We had a bunch.
We had some of those.
We
were on the phone till like midnight, multiple nights in a row, arguing with because you're talking with 100 agents and
you don't understand this.
Nice
you are the first domino. If your date doesn't stick, none of these other dominoes stick. And if you go down, we're going down. We're taking you down with us. Or if we go down, we're taking you down with us.
And then it all somehow always comes back to pricing your home appropriately.
right. Yes.
Because if you don't, then the whole domino chain is just screwed.
All right. I don't know that I've got time to get. We might have to save this one till next week. I don't know. I'm out of time for the most part. So let's see. So we'll just leave that on that then. I'm sure if you're paying attention to real estate anywhere, you probably have seen this. Compass. I'll just tease with that. We talked about at the beginning here. Couple massive companies now. I think they're now by far like head and shoulders the number one residential real estate company in the world. Then so Compass now owning all these brands then, and it's Century 21, ERA, Better Homes and Gardens, Coldwell Banker. I don't know, Corkin Group. I don't even know who that is. Sotheby's International Realty. It's also mortgage companies, title companies, Cardis that does like the relocation, all that kind of stuff like that then too. And it's an all stock purchase, meaning they are offering Compass stock to buy this. So if you're an Anywhere person, you're made out great, I guess. If you're a Compass person, I think their stock dipped quite a bit then too. And they also are they're taking on $2 billion worth of debt that Anywhere had. So there's quite a bit to kind of dissect through there then too.
Is that Corcoran like Barbara?
Probably, because her got bought out. I mean, hers is like a $50 or $100 million thing. That's what we need to do to start a Shark Tank real estate company and sell it for $100 million or something. Will be great.
Kidding.
But and they're trying to buy. I think I told you guys that we've had offers from a couple of these companies that wanted to buy into our brokerage and things like that then too. So they were aggressively buying. Now Compass is aggressively buying them. Compass was trying to buy not Sotheby's. They were trying to buy Warren Buffett's Berkshire Hathaway, and couldn't get it done. I think that's a deal they wanted, but you're dealing with Warren Buffett on the other side. There's probably a pretty hard negotiation. So I don't know. There's more to uncover here. So I'll have to leave it at that. Come back next time. Check it out here. We'll have to cut this one off here. I also got two. Oh, man, there's another good thing I want to run by you guys. I'll save it for next time. But imagine you're buying a house and it's like Amazon at this point then too. It's just a buy it now feature. There's no negotiating, there's no whatever, but the interest rate could be way better. So instead of getting your 6.5% interest rate, you might end up at 3.5%, but it's like, here's the price, here's the term, buy it now, close within 30 days.
There's a lot of people that would do that.
Yeah.
I think there's a lot of people that would do that.
There's literally...
You're building a home. Would you do that?
There's literally...
I have to see the other terms.
So right here, if you want to look, withrome.com, check it out. I'm 100% on the fence with it. My boy Chris Smith here, who one of the founders of Curator, started I really got to go though. he started him and Jimmy Macklin started Curator. He was pointing this out then too, put me onto it then. So it's called Rome. You're basically, we'll come back to it. Teaser, come on back. We'll talk about it. Buy it now feature on real estate. So that's it. That's episode, what are we, 55? Mm-hmm. 55. We'll come back for 56. We got more to talk about with that Anywhere, Compass, merger, the buy it now feature on a house. I'm sure there's a bunch of other stuff then too. Yeah. So, all right. Thanks, guys. Thanks for stopping by. Like, subscribe, do all those fun things. We will see you next time.